All right, President Biden bragging about the economy in Wisconsin today. Does he deserve any self-praise? Let's ask Kevin Hassett, former chair of the Council of Economic Advisors and now distinguished fellow at the Hoover Institution and author of The Drift, Stopping America's Slide to Socialism, the most important book in the 21st century. Kevin, 3.3% GDP today, 4.9% GDP in the third quarter. These are last year's numbers. Lower inflation. Biden is bragging about it. What do you think?
I think that the numbers were good, and the numbers have been better than we expected, really, for a few months. Inflation is worse than the market thinks. You and I have talked about that. But I think we have to, pause and really think, not just, is Biden lying about the numbers? Because he's not. The numbers are the numbers. But why are they like that? Because it's not that he's really done much to the economy. Otherwise, he regulated it a lot. He is letting tax hikes come. He's not doing things in economic models make the economy boom, but it's booming anyway. And I think for me, the leading theory, and I've been digging a lot into it this week, is that the productivity gains from artificial intelligence spreading to production everywhere in the economy are way bigger than I expected. And there's starting to be some science out there, a guy named Eric Bringelson out at Stanford, that shows that, basically productivity goes up 15 to 20% when a company hires someone like Snowflake or something, these big companies that come in and help you are better. The way to think about it is that there's like chess AI that can beat the very best chess players. And so if you get like a business AI to come in and run your business, then it's going to be smarter than the humans too.
But it's not showing up as in the business side. I mean, the business side has been flat to down. That's what I find trouble. The biggest contributor to all this is government. Government
and consumption.
I mean, but even in this last quarter, the fourth quarter, consumption was 2.8%, government 3.3%. In the third quarter, consumption strong, 3.1%, government 5.8% at an annual rate. I mean, how long can that last?
Right, and there'll be a reckoning for that, for sure. But again, I think that there's something else going on that is a little bit stronger, because one of the things that you and I have known that we've been talking about since way back in the day, back when you worked for President Roosevelt, right?
I never worked for Roosevelt.
But the big spending,
Teddy Roosevelt.
the big spending doesn't necessarily give you the GDP that you think. Like these Keynesian models that you get these, if you have high government, then you get high GDP. They don't necessarily work because there's crowding out. And so I don't think that it's just he spent a lot of money and juiced the economy. I think that we're going through a kind of 90s technological change that's going to actually make the economy stronger than people think for a while, regardless of who's president. And I think it's really politically impactful. If we get another quarter or two like the one that we just had that surprises on the upside, that's very good for President Biden's prospects, right? People are going to say, hey, the economy's not as bad as I thought.
I know, it's going to help.
And I'm saying a fourth quarter GDP growth of 3-something, he carries that all the way through to the election, then I think that's going to be much harder for President Trump or whoever to defeat him.
All right, we'll leave it there. Kevin Hassett being very honest.